Hi everybody, welcome to another update on the stock screener. Today we are going to talk a bit about Jaguar mining and compare it to Soma Gold. Because some people have expressed some interest in Jaguar mining because it's going down in share price. Maybe it is a bottom and it could shoot higher. Also, they have increased production in the coming years. So let's talk about it. And I will give you my take on it. So, as always, we use the NPV calculation method because then we can see how the cash flows come in the future. And we're going to compare Jaguar mining with Soma Gold. So first of all, let's look at the data. So Jaguar mining. So this is production data. And you can see that the trend is going down lately in the past 2 years. That's not a good sign. That's also why Jaguar mining has been going down in share price. This is not looking good, especially when you look at the development meters. That's how much development they are doing, and that's going up. So even with increased development, which costs money, the production is going down. So what's happening here? That's not a good sign. Normally it should go higher with higher development meters. So that's the first red flag. Second, let's take a look at the costs. So here we have Jaguar mining costs. AISC is going higher. So it was at 1000 in 2020. A very good AISC. And then the costs went higher and higher in the coming years. Today it's at almost 1600 costs. These are very high costs, so that's not good. Production is going down, as I told you before, and I think this trend is going to keep on dropping. So production keeps going lower and costs keep going higher. So this is a troublesome company. On the right-hand side, we have Soma Gold, where we know that production is going to increase this year from the 6,000 level, and we will have some new production data next week. So let's hope that those production data is going to be good for the month of June, and then we will have the second quarter production data. I think it will be around this level, 8,700 maybe. And it's going to keep on increasing to the 12,000 level by next year. Okay, so production will rise a lot at Soma Gold, and all-in costs will probably drop below 1,000. That's the outlook. So we have two different companies. One has lower production, higher costs. This one has higher production, lower costs. So if you ask me, I would buy Soma Gold instead of Jaguar mining, just based on these trends. Next up are the margins. So here we have the gold price, hoping that it will go above 2,000 in the coming years. Could also go down. But then we look at the costs. Jaguar mining has an AISC of 1,500. They're trying to get it down, but evidence tells me that it's going up, the costs. They can say all they want, but evidence tells me that it's going up. But okay, these are the outlook of the company. They think they can bring it down. But even then, the margins are lower than with Soma Gold. With Soma Gold, we are going below 1,000, and we will have extreme high margins, around $1,000 per ounce margins. So from a safety perspective, I would go for Soma Gold because this is much lower cost, probably because the grades are much better, 8 grams per ton. And at Jaguar, we have only 3 to 3.5 grams per ton, I think. So that's almost half the grade of Soma Gold. So based on this metric, I would also go for Soma Gold. Next up are the financials. So Jaguar Mining with the latest quarterly results has a PE of around 7. Not bad, but we have dangers on the costs here. If gold goes down, then the PE ratio can rise very fast, above 10. Soma Gold is currently at a PE of 3, forward looking. So this is looking good margins and also great valuation. Great PE ratio, and here it is double the Soma Gold PE ratio. Also, you can see here equity is rising much faster than here. So now let's go to the NPV calculation. So here we have Soma Gold with an enterprise value, which is the market cap plus net debt of 70 million CAD. That's around here. And cash flows will come in like this. So in about 2 years, we will get our money back. And then we can grow to the upsides. So investors could anticipate this and already give some value to that. I think we can go to maybe 80 million enterprise value by next year, and then 100. So a double in 2 years, much better than putting your money on the bank account, where you get 1%, right? You only get 1% on deposits. Here you can get 50% per year. Much better. So that's Soma Gold. And then we have Jaguar Mining, NPV calculation. First, let's look at this chart. Look at the capex. The capex here is almost the same as the cash from operations that comes in. So they don't have a lot of free cash flow. That's a concern. So capex is around 10 million per quarter. Or is it, yeah, per quarter? That's not good. It could also be around 5 million at some times, but lately it's 10 million. So I just took 15 million just to be conservative, but it's a high capex company. So all of these cash flows will be eaten up by the high capex. Costs are also very high, AISC of 1,500, going maybe to 1,400. And production isn't going to rise that much, from 80,000 to maybe 100,000. They say that they can get it to 135,000 at some point. Let's show it, but I don't believe it. So, and that's because the net income is just so low. There's not a lot of cash coming in. So how are they going to pay for the expansions? So enterprise value is at 125 million, somewhere here, US dollars. And you will get your money back in 7 to 8 years, here in 2028. And then we can maybe grow higher. So when you compare these two, here you get your money back faster in 2025. here in 2029. So to me, it's very easy. I would just buy Soma Gold instead of Jaguar mining. That was the video, and I'll see you in the next video. Bye.